And now, all the way from Dallas, Texas, Mr. Jimmy Edwards. Jimmy, thank you so much for being on the Generations of Wealth show.
Yes, sir. Thank you for having me. Glad to be here.
Why don't you tell the world about yourself and leave out the part about being a Cowboys fan?
Love it. Yeah, I'm here in Texas, Dallas area. I Texas through and through. Was born in Texas, raised in Austin. Went to Texas Tech, lived in Houston for a couple years, and I've been in Dallas since 2009. Um, I been in real estate my whole life. Was in business school, marketing, then switched to finance, and then got a emphasis in real estate. And last semester of college, our professor had us read Rich Dad Poor Dad, and it totally changed my life. Moved to Houston, got licensed. This was in 2006. Was selling high-rise condos. The world was crushing it. And then 2008 things started to change. I moved up to DFW and ended up doing loans, Countrywide, Bank of America, and then VA loans for a while. And then 2013 started flipping houses full time. 2017, 2018 got into apartments and been buying, apartment buildings ever since. So we focus here in DFW and do value add, C to B and love it, man. Love it.
Well, I love the fact that you've got the background back into the former crash.
Yeah.
And I was as well. I started in '03, so I lived through it, got my butt kicked. My listeners are very well aware of all of my stress and turmoil that I went through back then.
Yep.
So maybe we'll just even start there.
Yeah.
As we're recording this, for anybody that's listening in the future, I guess we'll find out what actually happens. But the markets are starting to shift. We're definitely seeing turmoil in parts of Texas, parts of Florida, Vegas. What do you see happening specifically in your market? And then do you pay attention to the other markets or not really?
Yeah. I mean, mostly I really just focus on DFW. We own a property in San Antonio. We've had some deals in Lubbock that did really well, but I mean, for the most part, I'm really hyper focused on Texas, but I do kind of hear, what's going on. I have a buddy who's actually a broker in Florida and just moved back to Texas because it was slow down there. I know that Vegas has been a little soft, at least on the strip. So, that's usually an indicator of what's going on. But yeah, I mean, I was doing loans. I started doing loans in 2009. And, it was as rates were going down and as people were, values were shifting and they were upside down, right? So like, just doing residential mortgages and I would take 50 calls before I could help one person. Fortunately for me, like I shifted into a segment that allowed me to do really well. So I was making money, but hearing a lot of stories, right? And so, fast forward, it always, my thought process, look, if you have enough runway, you can usually make it to the other side. And so, and also variable rate loans, I think, um, hurt a lot of people. And I remember that, right? So, when I came into buying stuff myself and investing other people's money alongside us, it's always kind of been like I feel like a lot of people kind of got stuck with a hot potato, short-term bridge debt, and what do they do? It doesn't matter if your value drops as long as you can, you know, pay for your expenses and make it to the other side. And so we sold a handful of deals in 21, 22, bought one in 22, bought one in uh, just last about 6 months ago in 24, but all long-term debt, value add deals that still agency would finance. So Just try to be smart about it. And values have come down in Texas, probably 30%. Um, so there's buying opportunities.
Those values, are you talking on the commercial side, 30% or on the
Yeah.
residential side?
Yeah, commercial. So probably the same deal in 21, 22 is 25, 30% lower today, right? As interest rates went up, cap rates
Mhm.
decompressed. And then we've seen, with um, additional supply, occupancy and rents have gotten a little soft. Dallas Fort Worth, I feel like has fared really well. There's been like a couple fire sales, but they were kind of deals, that I didn't really, I don't want to wear a bulletproof vest to a property, but other markets have, been affected more, right? So, um, I think we're closer to the bottom, and even if there's a little bit more pain, again, like I think that 5 years from now we're going to be in a better place we are today. So, you're never going to be able to catch everything right at the bottom, but if you're close to the bottom before it starts coming back up, then you probably beat most of the mainstream. So that's what I try to do.
So I've been traveling to DFW for several years, and you drop in at the airport and drive to wherever I'm going, seeing all the new construction. Some of that's apartment complexes, a lot of single family type stuff. Is the new construction still raging, or are those contractors, those developers starting to back off right now?
So there's still a lot of construction in the pipeline, but it's starting to taper down. I think there was probably less starts this year than last year, same previous year, right? So it's started to taper down. There's still new deliveries, but they're being absorbed. I think that the single family homes, the developers that are building those, I think we're finally shifted to a little bit of a buyer's market in single family residential. But I also am aware that, those single family home developments, the builders are off, they're basically paying for a rate buy down, which on a $300,000 house probably costs 20 grand. So, I think that I mean, you drive up north as far as you feel like going, and it's still, I mean, it's still bustling. Um, the sentiment has shifted, but it's still moving. I mean, it hasn't, you know what I mean? Like I don't feel like we're in a crash. I think like we're in a little bit of a correction, but I don't think that it's going to be drastic. I mean, historically, Texas has always fared pretty well through any, market down cycle.
Well, and as a former lender, um, and I was in the lending space as a hard money lender for 10 years.
Yeah.
Not anywhere near what you were doing, as far as your clients, but I always found it interesting when we came out of the '07, '08, '09 era and they got rid of all the subprime and the variable rates, products. And it was just bad, right? The banks were all bad, except now as we came into 2011, 12 through the whole, till basically now. The government-backed loans were the ones that became easier and easier to get, right? And
Right.
we're seeing, FHA, VA, USDA, all those types of products, even conventional loans. People can go get a conventional loan with 5% down. They just repackaged the same thing they used to do, called it something different, and now it's okay because it's government insured, right?
Yeah.
How do you feel about that? 'Cause I know how I feel about it.
Yeah. I mean, it's it's interesting, right? For the last 2 years, I did almost all VA loans. And I think that uh, a lot of these guys and gals, I think deserve that opportunity, right?
Mhm.
And there's also, I would say that 99% of those loans that I did, um, they didn't have, tons of money in the bank, but they certainly had a income, a steady income, right? And they also had, a kind of an attitude of, I'm gonna keep making my payments even if, I'm in a tough spot, right? So I think that, and that's about as zero down as you can get.
Mhm.
Um, FHA, conventional Fannie Freddie, I think that um, I don't think there's as many. I mean, stated income, no doc was probably, pick your payment
Mhm.
was probably not the best program. And I started seeing those in the background, and I'm like, oh man, this is not good. So yeah, I mean, I think that there's some within capitalism, I think that it's good to have some guardrails. I'm probably closer to the middle. I like to make my own money and not be told what to do with it. So, but
Mhm.
not everyone is like that. So I don't know. There's kind of like a blend of like, hey, we need to keep um, deals moving, in the right direction. So there's got to be stuff available. But it's a tricky spot.
Well, and now when you do look at a market correction, um, and we'll use Florida as an example, and Florida is where I lost my rear end back in
Hmm.
'07. Um, the people that bought those properties with FHA or VA or any of those programs, and now they're seeing their values go down 25, 30% in a lot of markets already. It'll be years before they come back to even. Now, yes, if they can afford that payment and their job stays steady, everything's fine, but the insurance is what's kicking everybody's ass.
Yeah,
So their insurance goes up, they have no choice. They're in an FHA product, for example, they can't self-insure, they can't not have insurance, and they're going to be just more prone to walk away. Um,
I agree.
and I think, I read a news story the other day, and I don't really follow mainstream media because it's mostly BS,
Yeah,
but I believe the government has been propping up defaulted loans for, several years since COVID, and,
yeah,
and not flooding the market with foreclosures. And I think that's going to come to an end. It's going to have to a certain degree because, again, taxpayer dollars are going to pay that insurance, so to speak, that backed these banks that did the loans. And the borrowers are paying for private mortgage insurance as part of their payment
yep,
anyways. But I feel like we're going to see a flood of in areas. I
yeah.
don't think it's going to hit us in the Midwest nearly as hard.
Same
But
here.
in the residential side, and then we'll get to the commercial in a second. But in the residential side, what do you think is going to happen with Trump and the current Fed chairman? They're, depending on when you listen to this episode, they're kind of at odds right now. What do you think is going to happen with rates and specifically on the residential side?
Yeah, 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 yeah. I think it's been interesting. At least, in DFW, I have not seen um very many foreclosures. I've not seen very many REOs. I think that at least here, most people, even if they did 3% down, unless it was, in the last 24 months, they probably have a little bit of equity. But I would say like the majority, of homeowners probably have a pretty low fixed interest rate and a decent amount of equity. It got extremely difficult to, I mean, that used to be the game, right? Buying foreclosures, buying REO deals, buying short sales, upside down, all the things, and it got much harder because even people like I know several people in close proximity that got in a tough spot and they still had 20, 30 grand in equity. So they just sold, cashed out, started over. And I do think I've noticed that too. I feel like, man, sometimes I feel like people have short-term memories, but then there's also a part of me that goes, man, like I think a lot of guys who've been around for 15, 20 years, especially some of the, high level seasoned bankers are like, hey, like, and it's probably illegal for them to have these conversations, but I almost feel like it's like, hey, man, the less deals we flood the market with, the better chance we have of not losing tons of money, right? And so it's almost like I feel like they have more shadow inventory to try not to collapse everything. Um, I think that, it's been interesting. I think that rates, last I look, I mean, I think the single family mortgage was around 6.5%. I'm sure you could get a buy down to 5.75, but I think that the sweet spot's probably like 5.5, 5.75, just psychologically. And also, if you have a 3.5 or 3.875, 6.5 is probably a difficult transition if you want to move. But the closer you get to the low fives, probably makes it easier to start seeing more activity, get some money moving. I mean, I think that that's the biggest thing is everyone's got trapped equity.
Mhm.
HELOC rates are 8.5, 9%, so I think that, everyone, and I was using, my house shot up in value and I was using my HELOC as a mechanism to make things happen. And, when it was 3%, you could put it in a vehicle and make 10. It's like, okay, but then goes up to 9 and you're like, let's pay this off. And, so I think that we need to get the money moving. And I think that we're in kind of a stalemate. And I think if we've just been sitting at a kind of even keel, right? Like if rates went up a little bit more, I think it starts to tumble.
Mhm.
And I think that we've just been holding at this steady spot. It goes down, we start moving more. I tend to agree that I, uh, when Powell moves on, I think that there's going to be a pretty heavy push to get someone a little more dovish.
Mhm.
Whether that happens or not, we'll see. But I think we all kind of see how Trump plays the hand. So it has been interesting to see Powell stick to his guns. And I mean, that's his job, right? To try to be independent of the president. But I do think, I mean, we can only sit in a stalemate for so long before we got to move. And I think that we're not too far away from at least, 25, 50 basis point drop. So
Well, I'm curious when the government's going to step in and come up with an insurance product to help people in California and
in
anywhere that the
Florida.
hurricanes hit, Florida, parts of Texas, and even the Carolinas and Georgia,
Yeah,
because at the end of the day, that is what's killing the affordability in most of those markets. It's
100%.
and so even if they drop the interest rates, it may not move products if people can't get insurance or they
That's
can't
a
get
good point.
affordable insurance, right?
That's a good point. Yeah,
So we'll see if that plays out. I've not heard that in any kind of mainstream media yet, but I just feel like that's somewhere they probably would step in, and quite frankly, maybe they should step in there. Uh,
yeah,
I mean, I'm anti-government as most entrepreneurs, but um, we got to do something to keep the market at least even.
I agree. And sometimes you need, I don't, I don't like to take um prescription, like a good example. I don't like to take prescription drugs, but like sometimes when you're sick, you need to take a medicine just to bridge the gap, right? And I kind of feel that way with what you're saying about insurance, like, it got really, really bad for a while. And I'm in Texas, so I'm not on where it's even more drastic. I mean, you can't, like you said, a matter of fact, we were selling a deal in San Antonio, and our buyer was 1031ing from Galveston, and this was probably 2022.
Hmm.
And the buyer that was buying from them couldn't even get insurance, period, to your point.
Right.
Um, and Yeah, I mean, it's interesting. It blows my mind though that like, and at least here we've got some relief. We had one of our San Antonio properties went up 100% over 3 years, so it went from 100 to 200,
Hmm.
and then we just got an $80,000 haircut. So we found some relief. I think that there's finally some companies coming in. Um, Insurance is a crazy game to me, and it feels like, they it's almost like a monopoly at sometimes, which,
Hmm.
there should be more options. So I'm kind of with you. I like the government to stay out of the way, but sometimes, I mean, we need a medicine for a short period of time.
Yeah. Yeah. Well, so you started, buying and flipping houses. Assuming when you started, that was probably buying a lot of REOs and
Yep.
foreclosures. And then you segued into multifamily. What, anybody listening to this that's kind of been in that realm for a long time, right? Doing single families for a long time or a few years,
Yeah.
want to get into apartments. What's some mistakes that newer apartment investors make or should try to avoid?
I think that the apartment business is more of a customer service business in my from my perception. And I think that's what has allowed us to win is understanding that. My business partner, Catherine, she is extremely passionate, which has is fuels me too, about doing community events. And I think that there are a lot of operators that will um, try to cut expenses to increase profits. And I think that generally that is the wrong way to go. And I think that the more involved you are and make it a community and a place that residents want to live and they want to bring referrals, the less you have to advertise, the less you have to convince people not to go out the back door, and you end up being more profitable, right? Like, and paying up for a top tier manager as opposed to cutting payroll to, you know what I mean? Like, the more you start cutting expenses, the further you get into the, circle of death, right? Um, and so that's really been, my experience is, is really treating the business, like a customer service business. And that was much different from flipping houses and, I mean, to some extent having single family rentals, you take care of your residents. Um, and I was always, when I was building my single family portfolio, I was always never in a hurry to get it leased, right? Like, it's if I gotta cover my own mortgage payment for 1 or 2 months, that's fine. I want to get the right person in that's gonna interact well, that's gonna pay, that's gonna, maybe they know how to change the air filters and light bulbs, like and I think that I learned a lot from that and being compassionate and not always being stuck on the book, right? I think, some of the best residents I've had, I gave them a little bit of leeway instead of being extremely, um, I don't know what the word is, I can't think of it, but being hard on the book, right? So that's really my, you can cut costs by taking care of your residents, right? Like we don't have to pay a giant advertising bill, but I pay a strong manager, right? So I don't know.
So when you got into your first apartment, what was that like making that transition? Was it kind of an ass pucker moment,
It
or were you pretty confident in what you were doing?
It was an extremely eye-opening experience, but coming from the single family flipping game, my eyes had been trained to focus on physical distress. And as I've grown over the past 7 years, I realized that you can have uh, operational distress with no physical distress and achieve the same goals, right? So that first deal was a 16 unit deal, 20-year owner that hadn't spent a penny. All of the residents were probably not bankable, paid cash, and were they didn't have anywhere else to go. The only place that would accept them was a place that, had mold on the walls and all these awful situations. Um, so we came into that deal knowing that, rents were 500 and we expected to get 1200. These were, townhomes. And we probably spent um, 15 a door at a minimum, just, on rehab. And, we even had the city red tag us, uh, not for violations, but because the police chief wanted to get us into the room at a round table. And so we ended up showing up with housing and the police chief. And they said, hey, look, what can we do to help you guys? This has been a magnet into our city for the past 20 years. We tried to condemn this guy. We couldn't. What do you need for us to do? And there was a 5 acre park across the street, and it was drug dealers, prostitutes, not kids weren't playing there. Um, we re-tenanted the whole place, and as we went to sell it, there were kids playing soccer, and it was like the coolest thing ever to see. But um, I realized that when you have a pretty heavy demographic change, that we tried renting a unit and we had one or two people still from the old ownership living there. And within a couple days, they kicked in her door and stole her TV. And she was like, I'm out of here. Sorry. So we realized that we had to clean house 100% before we could build it back up. And we did that and it worked. And it was a heavy lift, right? But extremely rewarding, to say the least. So,
Well, you mentioned the police department, and I think that's something that we should build out on a little bit because 15 years ago, I bought three buildings, all side by side duplexes, and all on a city block. And when I bought that, I had actually gotten to know the police chief, and this was a suburb of our local city. And I had been making offers on these properties for 6 months because
right,
they were listed. And I got this message from the police chief. He says, you might want to go make another offer on those properties. Well, the city attorney had just sent the owner a love letter that said, it's time. You need to
right.
clean this up, right? The majority of their domestic violence calls and everything else was going to these six units, these three
Yep.
buildings. So the next day I made my offer. They accepted my offer. I bought those. I kicked everybody out. We remodeled every unit, and I never had to have a single building permit.
Right.
The police chief went to the building inspector's office, which was in the same municipal building, and said, "Leave Derek alone." And they set up their patrols to go past my property
Yeah.
multiple times a day to make sure nobody was messing with anything. Like it was a great relationship. 2 years later, there was another single family house in that same community that the police chief tipped me off to, and I ended up buying that too. So,
Love it. Yeah.
when you are improving neighborhoods and go and talk to these people. If you see a cop that's driving by, wave them, flag them down, have a conversation with them, let them know what you're doing to improve the neighborhood, and they will reciprocate. So,
100%. I love it that you had very similar experience. It's It's extremely rewarding, right? To feel like you're being welcomed into helping facilitate positive change, right? And that
Yeah,
can be, better than profit sometimes, right?
for sure. So you got through that first one, and then obviously you've grown since then. So the first one, did you syndicate that, or was that just your own, your own money or your own loan individually, or what have you done since then?
Yeah, so that deal was our first deal. We were looking for kind of deals that size, and a friend of ours had found one, but he'd already been through, multiple bigger turnarounds on bigger projects, and was like, "Hey, like I've got this deal, let's partner." You guys can do the work and I'll help with the financing. And we're like, awesome. And so that kind of kickstarted us into the business. So we just had four partners on that deal.
Mhm.
And we ended up 1031ing into a 100 unit deal and then sold that deal. So I think we from start to finish and maybe 4 years we turned 300,000 into 4 million. So it was a pretty good deal, partnership
Mhm.
and timing the market well. And then we've syndicated a couple deals. We did another 100 unit deal that was 50% occupied, and we took that thing down to like 30% and then brought it back up. And then yeah, we've done a handful of 100 unit, C-class value add deals. We got a 168 unit deal right now in San Antonio. We just bought a 66 unit deal in Dallas. I've got a couple LOIs out right now on, 78 to, 112 units. Yeah, we raise money. We put our own money in. Sometimes we just do the deals ourselves. Sometimes we, you know, have multiple investors and it's man, it's fun when you make your friends and family and uh, uh, money, on the deals that you do. So I find that rewarding. So yeah, we're always looking for investors.
So when you're sourcing your deals, is it relationships with brokers? Is it just relationships in general, referral type stuff, or out there driving for dollars?
uh, all relationships and whether that's brokers, lenders, attorneys, title companies, insurance, all the people that are doing deals, and then owners as well. I try to, stay, within networking events and talking to people. And, I realized transitioning from the single family game to the multifamily game, and this was like 2017, right? So like there wasn't tons of AI and robocalls and
Hmm.
text, mass text, and all these things. I was still doing yellow letters. Um, but I realized pretty quick that it's extremely hard to compete on commercial deals with the brokerage shops, right? I mean, they've always got an intern that's hungry to pound the phones. And it's just really hard to compete with that, much less, 10 of those offices, right? So I decided, hey, let's build our value as someone that does this what they say they're going to do, and someone that can close and we're easy to work with. And I think we've gotten ahead of a lot of deals that ended up, they didn't run the full marketing process because, we were able to make a deal that worked for everyone. So I think it's, again, just a relationship business.
And that was kind of the direction that I was thinking, right? With people that are thinking about the transition, kind of the theme of this show is, today is your transition from single family to multi.
Yeah,
I think a lot of people are a little intimidated because the yellow letters may not work, right? The marketing they did to buy single families is different. Now, I would also say that's market specific because I'm in the
sure.
Midwest and I deal in smaller towns, smaller cities, can I still go and look up the owner and knock on his door and shake his hand or send him a
Right.
letter? Sure, I can, versus DFW, millions of people, lots of other investors. So it does depend where you
That's
are.
a
But
great point.
but
Yeah.
I think the main point is you got to go out and do the work. If that means you got to go to the networking events, you got to go to the landlord association meetings, introduce yourself to these, older landlords that may be wanting to, retire. Um, get off your butt and go to those meetings, shake some hands.
100%. Yep.
Probably
Yeah.
the last thing I want, because you mentioned AI, so I'm curious. You guys are self-managing all your units, or are you hiring outside management companies?
Right now we have third
Okay.
party management. Yep. But we are extremely involved. Um, we have weekly calls and Catherine's at the property probably every other day. Um,
So are you starting to embrace AI in your business? And if so, what are you using and how?
I am I just really started opening my eyes probably the last 6 weeks. I've been, we're kind of old school, um, and we have a lot of C-class tenants, right? So, don't have tons of technology. I'm trying to catch up on that. Um, I was actually having this conversation yesterday. I think that as much as there's a lot of situations where I get excited about AI and I'm like, oh, this is badass. And then I'm like, oh man, this is the future. And I lean into it. I feel like at every corner, um, at the end of the day, as much as technology can help you improve and speed up the process, like there's still a human relationship aspect of almost every transaction that you just can't replace. And I don't know, how far that will go, and maybe it changes, but I'm trying to learn how to use the tools to help me be faster just in my day to day. But we're not using it a ton, so I'm trying to learn. There's definitely things I could be learning.
Yeah, and my challenge, and we are actively trying to incorporate more and more AI in our business, but I'm not techie. So I always have to rely on other people and you don't know what you're paying for, if it's actually
Yep.
going to work the way you envision it or not. Um, just today before, jumping on this show with you, I spent another 30 minutes with my team just trying to figure out a workflow that's going to be essentially run by AI. I don't like it. It takes me away from what I'm supposed to be doing.
Yep.
But the goal is to get it set up to where it does free up all of our time. We'll see if that's how it shakes out, but that is the
I'm
goal.
I'm with you 100%. Um, I'm way better at running my mouth and building relationships than I am building technology tools. I've always, what the biggest thing that, you know, uh, I don't know how to phrase it, but concerns me or that I'm skeptical of, is that it moves so fast
Hmm.
that, 2 years ago in 23, we had someone help us build systems and we spent like 15 grand on it. And then now fast forward 2 years and it's almost, you could probably convince me that it's obsolete because now there's a new technology, like similar to our cell phones, like, 18 months later, it's a brick and it's like, so I struggle like, how much time do I spend trying to learn these systems when 9 months from now I'm gonna need a different system that's better, right? So I'm with you. We all just need a teenager that knows all this stuff front and back to just help us run it.
Well, and my fear is we go and spend all this money and it's in a third party platform that we don't actually control.
Right,
And like I use a CRM for all my real estate transactions, and their built-in AI is it's not anything I can adjust, so I don't like
right.
it. So we're building out all of our AI in our Go High Level platform, and it's yes, it's technically ours, but the day I stop paying for my Go High Level account, it's all
Right.
right.
Yeah.
So, but that is the nature of it.
Right. Yeah.
So,
100%.
well, Jimmy, I really, really appreciate it. Man, this conversation went very quickly, and I think there's a lot of nuggets in here for people, especially if they're looking to transition, um, you know, within from the residential space to the commercial space. So, thank you very much for your insights and being an open book.
Love it. Yeah. Thanks for having me. And I've enjoyed it too. We'll have to do it again.
Absolutely. Well, for everybody else, I say it on every show. Thanks for being here. If you just found us, thanks for finding us. Come back again. Please do everything you can to help spread the Generations of Wealth message and the show. Give us all the reviews and the likes and the loves that you can. And, until the next show, go out, live your vision, love your life. See ya. Welcome to the Generations of Wealth podcast. I'm your host, Derek Dombeck. And today we've got a good old boy from Texas coming on our show named Jimmy Edwards. And you know what? Jimmy is he's just that perfect story that went from growing up in a real estate family, being a lender, working in the lending space through the start of his career, and then flipping houses, and then moving into apartments. So we're going to talk about that whole transition, help you kind of see what to avoid, what to look for, all that stuff. Before I bring Jimmy on, though, I like to always take a little bit of time here to let you know I'm here for you, right? Anything I can do to help you. If you need a connection to somebody, if you're looking for money, you've got a deal that you don't know what to do with, or you can't quite get it across the finish line. Yeah, I love the creative deal structuring. Whatever it is, reach out. Go to derekdombeck.com, go to thegenerationsofwealth.com, send me an email, derek@globalgow.com, and let me help you. That's what this is supposed to be all about. So, with that said, let's bring on our guest.